My next guest is both calm, cool, and collected, and by nature and by profession. Please welcome to the show, Dan Geltrude, America's accountant. Thanks for being on today, Dan. Okay, I came up with this idea that I didn't want to talk about what everybody else is going to be talking about, and that's Russia, Ukraine, but you can't not talk about it. But what I thought we would talk about is how you're talking to investors, customers, whomever you speak to on a daily basis about how they can keep themselves calm, cool, and collected rather than be, reacting at the highs and lows. Because as I said on Friday, today's going to be a good example. If you have to buy the market today, it's because you have to buy the market, right? You're not buying it because you think like you're going to see another squeeze higher, at least in wheat and crude oil. And when you're talking about the equities, if you're a seller today, that's not a good thing either. But if you're a buyer today, that means you kept yourself composed. You could buy because you didn't have to sell. So how do you talk to your customers about this type of market action?
Let's go back to that infamous or famous quote by Gordon Gekko. Don't get emotional about stock. That's what you're talking about, Scott, and that is the key. You can't possibly think that you're going to do well in the stock market if you're going to be one of the herd that are just going to follow the headlines. You're always going to be behind the curve. You can't time the market. You can try, you may get lucky from time to time, but having a short-term outlook is not the way to be successful. So what I tell people is you really need to have a long-term plan. And whatever that plan is, that's what dictates how you react, or even more importantly, Scott, how you don't react. So the things that you may want to do today or tomorrow, resist that temptation. Keep your eye on the prize. Where do you want to be a year, 2 years, 5 years from now? That's the plan that you stick with, unless there's a reason to change, but the reason to change is not short-term, it's long-term. That's what I tell people.
If I don't have a long time horizon, what would you tell me?
Well, I would say that perhaps the stock market is not where you should be.
Right.
Because if you're talking about, listen, I want to make a killing on the short term and get out. Well, if you want to roll the dice literally with some crypto like Bitcoin, be my guest. I wouldn't recommend it, but you know what I'd actually say? Go to a casino. You may have better odds that way.
Right. I mean, it's tough. And I'll tell you a quick little anecdotal story that when I first got in the business is just after 1987. So I was in amongst the carnage of what happened that October. At least a lot of guys that had traded through it. And I was young and I was just eager to want to know what they saw, what they didn't see, and how they handled themselves. And they all, to a man, they all said to me, make sure that whatever you do on the day before when it's all happening isn't so bad as to not let you in the door the next day. And I said, why is that? And they all said, because we had career years the next day, right? Because there was a lot of competition that was gone because they weren't allowed back in the market because they lost everything. And so the next couple of days, they were the only ones there to make prices, and they made an absolute killing. So the lesson I took from that, and this is, I think, something that's also good for folks out there that are in the markets, don't ever put anything on that's not going to let you back in the door the next day.
That's very true. You're talking about here, Scott, is you got to avoid the big mistakes. And that becomes even more critical the shorter your timeline. And what I mean by that is everybody has an investment timeline. Are you investing at 25, 50, 75? Whatever the case is, when you're, let's say, getting close to retirement or you're in retirement, the one thing that you want to do is avoid making that big mistake because your timeline is not quite as long to make up for those things. So again, when you are adjusting for your long-term outcome, even when that's long-term within retirement, you want to make sure that you're not doing anything where the doors close on you.
Right. Lastly, got about 30 seconds. How much are you investing in the bond market, or what are you talking about when it comes to bonds? It's a bigger market than the equities. A lot of people don't know.
It is. I'll tell you right now that I am still in the equity market and looking at that as that's the place to be, particularly because I believe I still have a pretty long-term outlook for the market. I'm not saying don't put a mix of bonds in, but that's where I'm not looking for a rescue, if you want to look at it that way.
Right. Well, I would say this: they're becoming more and more competitive as these yields rise, but they're all over the place, just like the equity prices are, up and down from one day to the next. It's not for the faint of heart. All right. I really appreciate you being on today. That's Dan Geltrude. He's America's accountant. He's coming to us from Nutley, New Jersey. Thanks for being on the show.